start. Good evening, everybody. Hope you guys are doing well. Shake my hand. Start off right. I always shake people's hands. Shake my hand. Hope you guys. Thank you, Colin. Yes, someone shook my hand. Appreciate it. Right. Thank you, guys. Tonight is, of course, lecture 3, end of the first week. All right. So this is, for those of you who are registered, this doesn't matter. But if you haven't registered, I just want you to know that today is the last day. Our lecture Zoom IDs are going to go public, right? The last day to register is Monday, right? Please, please, please make use of the link by Monday if you want to join. After that, it's too late because the pace that I'll start to move from week 2 to 3, you'll have missed too much. You would rather much just wait for the next intake. All right, 365. But yeah, I'd love to get started. Let's move this out of the way. Right, guys, so a couple of things have happened since we last spoke yesterday. It's just, I don't want to say it's unfortunate, but it's just, I wish we'd done class 3 weeks ago so that some of the things that are happening right now in the markets would also be part of the things that we can talk about. But it's perfectly fine. I did a war room 3 days ago, or on Tuesday, basically on the first day we did lecture 1. And I spoke about this area of value here where the dollar hit, was it yesterday? And I said it was going to be a strong sell. And with time, you're going to have charts that look something close to this, not all this detail. I do this for the public Telegram group to help them understand what fundamental analysis is doing versus the structure we are following and why these two things are equally combined. And if you master institutional supply and demand, you're good to go. All right. So this is literally quite an interesting development. But last night, we started off on our journey in mastering our major turning points, and we spent a lot of time on Euro USD. Now, I don't know if Daisy is around. Daisy had a question that I actually completely missed. Thank God she sent me a message to ask me. Daisy, are you around? Just let me know if you're in the Zoom room. Just type yes. And if no one types yes, that means I'll just wait for it to log in and then I'll answer a question, right? But tonight we're going to quickly tidy up Euro USD, and then we're going to look at a lot of Forex pairs. We're going to look at a lot. Okay, fantastic. She is around. Okay, cool. So let's look at Euro USD and deal with your question. Your question is actually perfect, and I'm very happy I didn't see it yesterday because when I read it today, it's very much in line with what we're going to do tonight. But let's just quickly do a recap, right? So remember, class is 2 hours. I'm going to spend about 20 minutes of every class making sure we are all on the same page with a quick recap. Number 1, we're looking for supply and demand levels. That's all it is. You're a supply and demand trader. This is all you care about moving forward. You're joining the supply and demand cult. You are forgetting about whatever it is you know about trading before my course. Number 2, there are 5 types of supplies and demands. All right. There are literally 5 types of S&D. You have learned supply and demand in number 1, A, which was major turning points. Very important one. This is actually the beginning of how we start to track money. All right, it's very important. I'll explain why I type notes like this in a second. Those of you who don't know me, I'll explain to you in 2 seconds. Number 3, the next thing you learned about markets and supply and demand yesterday was that we are going to be cautious about making sure that whatever we do in the markets, we buy low, sell high. And I'm going to teach you how to do that as we unpack supply and demand. Number 4, towards the end of the class, we started to talk about how price flows. So the banks, how price flows because of the banks. The banks have a timeline structure. Money, markets, systems, they think through them in 3 months. They have an annual profit target, right? A TP, profit target. And it's always in general in what is classified as a 10-year plan. But you'll see if you do data and you back test, it's actually between 8 years, 9 years to about, someone needs to be admitted, to about 12 years, right? So you can range. Each chart is slightly different, but on average, we're looking at a 10-year plan. For all your charts, we are always looking at a 10-year plan. You will see a massive change in 10 years. I spoke to you a lot about this yesterday when I said, well, that's because every single country has a Reserve Bank governor, and the Reserve Bank governor's job is to micro and macro manage its country's economy in relation to other countries. So the Reserve Bank governor is very important, right? We won't get deep into economics and all that kind of stuff, but it's important to know. So I said for our trading, our monthly time frame is going to become our governor. All right, so this is me literally reminding myself of what I've taught you. I'm hoping this is you making sure you've understood what you've learned so far, right? This is our governor. Our monthly time frame is the governor of our lives. What does this mean? Well, I said yesterday, you can't take a trade without checking your monthly time frame. I don't care what people are saying on Facebook groups, right? I honestly, if you're to write a poll, you would realize that only 2% or 5% traders even go to the monthly time frame. Retail traders never come here. Because of that, we are going to do that. Generally speaking, what retail traders do, we don't do. What retail traders don't do, generally speaking, we are going to do. Why? Because in the last 2 lectures together, I've been very insistent on this fact. If I want to buy something, I must create the conditions to do what? To sell it, right? I need to make sure that there is a seller. The markets are like that. If the banks want to buy Euro USD, what are the banks going to do? The banks are going to make sure there's a whole lot of people ready to sell Euro USD. I'll give you 2 examples and then I'll move on. I'll give you 2 examples and I'll move on. This is a supply. Why is this a supply? Because at the top, number 1, we spoke about this last night. We said supply is where we sell. I haven't taught you how to identify a supply. I haven't taught you the characteristics of a supply, so please don't panic, right? It's very abstract right now. Contrary, hey, what's up, Lucky? Got you, man, got you. Right, so I literally haven't broken down supply. It's still just week 1, but I'm simply saying we now know that supply is where we sell. We now know that supply is the available amount. It's literally the highest possible price, right? It can't go any higher. You might as well just sell. It's where banks like to sell high. Fantastic. Banks want to sell high. Let's say, because if you remember yesterday, in yesterday's recap, we also spoke about a couple of things. Let's see if tonight I can use different colors. Yes, I can, because it was starting to look weird. And let's just clean this up. So let's make this word so it doesn't confuse you. So 10-year plan, 4-5 buyer seller conditions. Sorry. So yesterday we spoke about a couple of things, right? Before I lose my train of thought as quickly as possible. We also explained the fact that there are specific market conditions that are conducive for market activities. Basically, markets move in zigzags. Remember that thing? That you'll never get a hedge firm taking $10 million of their position and dumping it all at once. They're going to dump a little, take profit, dump again, take profit. And that's going to create a zigzag approach, whether markets are going to supply or demand. And because of this zigzag, we said yesterday, there are a couple of key things we need to make sure we understand about price. When you're looking at a chart to analyze it, there are a couple of things you need to ask yourself. There are only 3. Number 1, where is price coming from? Right? Where is it coming from? Number 2, where is price going? Okay. Number 3, lastly, where is price right now? So between price right now at its current state, where is it coming from? Where is it going? If we can answer these 3 questions, what supply and demand will do for you is it will allow you to, it will open the eyes of your understanding, so to speak, so that you can realize that markets are not random. They are absolutely not random. It's very important. So if I want to buy Euro USD, I am not going to buy because I'm seeing an uptrend on my time frames. I'm going to buy Euro USD based on the fact that I understand where it is right now, where it's coming from, and where it's going. And if price is coming from a demand, but has not yet arrived at a supply, then sure, I will buy because I'm in the middle of an uptrend. If that makes sense. If it doesn't, we'll make sure it makes sense by the end of tonight's class, because tonight we're going to have to move on a couple of charts now and just pick up the pace just a little bit, right? Just a little bit, right? So these are the kind of things we dealt with yesterday so far. Now, let's say there's a supply up there. It's still doing that thing. Let's just make this all black. I don't know why it does it with the other colors. I will complain. Maybe Zoom saw I sold all my shares. I sold all my stock on Zoom. I've been waiting to dump that thing since last year, man, but it was pumping because of COVID, but it's their earnings are terrible. So, I mean, they need to figure that stuff out. Right, so supply is up there. Let's say price is here today, right? Let's say we are dealing with pound USD, GBP USD. We're going to look at that chart tonight anyways. Let's talk about it. I'm not saying this is what's going on in the chart. I'm just making an example. Now, let's say the banks want to buy. They want to buy pound USD. Now, remember, I told you guys yesterday, the function of the Forex market has nothing to do with me and you wanting to buy nice cars and buy houses and have money for Instagram. The function of the market is for bigger things: geopolitics, import, trade, exchange rates, stability, economic stability, linked to the reserve governor's role with monetary policy. We spoke about these things last night. So if I am in England, or the UK rather, I'm sitting in the UK and I'm talking to the president and the finance minister, and I'm thinking about importing gold from Africa, because as UK, England, London, whatever, we used to colonize Africa, and then these stupid Africans became independent, and so now we need to figure out a way to get all the gold, because that's what makes money viable. There is a currency exchange because of minerals. Do you understand that? Like, the exchange rates backing is still based on minerals. The United States removed the dollar from gold backing, but most of these currencies rely on the value of African minerals to even start to think about their economies. So I'm in UK, I'm the finance minister, and I'm talking to Boris. We need a stronger pound, so that we can start to extract globally, buy stuff there, blah, blah, blah. To do that, we need to increase the strength of the pound against something relative like the dollar, right? So naturally, we are going to buy. We're going to start pumping money into the pound. How are we going to do that? We need to pump money into the economy. We need better job reports, right? Reduce unemployment, etc. All these things are good for the pound. Why? Because outside of us as the Bank of England, we are looking for investors to put money in our economy. It's just an intro. I'm just giving you guys an intro where we're going to do trading now. I just want you to understand the big picture, what's going on in the background. We want investors to come put money in the UK, because when investors come, whatever investors put money to, it multiplies. If investors come into gold, gold goes up. If investors flood Bitcoin, the price of Bitcoin goes up. If investors flood into the pound, how do we do that? Interest rates. We'll talk about that later. Pound goes up. So this is the plan. But now in the Forex market, if I want the pound to go up from here, clearly somewhere up, there's going to be one day where the pound can't go up anymore, right? One day, even if you love Jaguars like me, there's going to be a certain car one day in my life that I'll be like, you know what? I love this car, but this is now too expensive. I won't feel okay buying a car for 10 million rands. That is just crazy. Price will always get to a place where it cannot sustain, right? It cannot sustain that high price. And because of that, there'll be a supply, right? There'll be a sell-off. It has reached that actual price. But to get there, to get from here to the supply is the beautiful journey, right? It is the pumping and the dumping and all that stuff. Now, if banks want to buy an instrument like pound USD, they have to, like we said earlier on, create market conditions that allow somebody else, somebody stupid enough, to sell their pounds. The pound is going up tomorrow. That means if you already own the pound, you're going to be richer. If you already own Bitcoin and you think Bitcoin in 5 years is going to be worth 200,000 US dollars or 500,000 US dollars, then it makes sense to hold on to your Bitcoin because you're going to be richer. What these big banks have to do is to start to create conditions for dumb people. So we've got two terms in the markets. Smart money is banks, institutions, hedge funds, blah, blah, blah. Dumb money is us, retail traders. Individuals, generally speaking, do dumb stuff with their money. They hide it in banks where they're interest is 2%. They leave it in pillows where there is no appreciation. They buy stupid assets that don't appreciate in value, but depreciate. We are considered dumb money. What the banks do is they need to start to create market conditions where dumb money makes the mistake of selling their pounds. Now, I'll give you an example. On your charts, if you've never traded before, just hang tight. I'm coming for you. If you've traded before, you will see this a lot on the charts. You will see, first of all, wherever the banks want to buy, you will most likely see a support. That's how they've taught you this stuff. Support means an area of value where markets have returned several times to buy up. So it's a psychological level. That's very important. It's under technical analysis, but a support is really a psychological level. It is a level where a lot of people believe they are going to buy low. Support, floor, buy low. Now, to do that, it means this should have worked somewhere in the past. Price should have done this in the past. Price should have done this in the past. And now everybody's looking at where price is right now. Where is price right now? Remember this? This was supposed to be a now at the end. Where is price right now? Because remember, before you can assess where it's coming from or where it's going, you need to understand where it is right now. So this is where price is right now. Most retail traders might assume, will assume that price right now is at a support, a place to buy. Fantastic. What the banks will do then, and other technical traders, maybe I should not have drawn that like that. Let's just do this, right? And other technical traders might come in as well and see something similar. They'll start to draw trend lines. They'll start to draw trend lines. They'll start to apply all the stuff that they've been taught. I'm just going to move my little, come on. It doesn't want to move, right? So we're just going to assume there's a trend line there that was perfectly drawn. Doesn't matter, right? So these guys are going to put in their trend lines. Now, if you look very carefully, price can do something stupid like this, do a little breakout, pop back up, whatever, sit on the support. When it breaks out here, right? This is called a breakout. If you don't know this stuff, don't worry. It's not important. It's just a retail trader stuff. There's a breakout of price. The support is broken. Textbook says when a support is broken and price comes back to retest, then you know it's time to sell because this level, this area of value, this psychological level has been broken. The trend line is showing us a downward movement. This is where price is today. The banks want to buy. This is what the retail trader is seeing on the chart. He's seeing a broken support, a downward trend line. What's the retail trader going to do right there? A broken support, a downward trend line. They're going to sell because that's what technical analysis tells you to do. You have all perfect market conditions to sell. When you sell, you make money if someone is willing to buy. But if you have bigger money and you want to own, you need someone dumb enough to sell. Does that make sense? So they create conditions in the marketplace for selling when they know that they want to buy. So all the retail traders come here, put in all their orders. Their stop losses are somewhere up here, and all the banks do is push price up. Millions of retail traders lose money. GBP USD gets a pump. Investors come in running, and the pound continues high. Now, if you think I just made all of this stuff up, and I don't mind spending 2 hours proving it to you, I'm just going to use the example of last week Friday. Last week Friday. It's the quickest, simplest example in the world. Last week Friday was a high impact news event called NFP. I'm pretty sure this is Friday. Right, so last week Friday was I think my 8th NFP of the year. I did not trade NFP in January, but it was my second highest amount made during an NFP news event. And it was quick because of the structure. The market structure allowed for this. So I'm just checking the dates. NFP was on Friday. I've switched screens, by the way. You should be able to see screen 2 right now. I'm on the charts. If you don't see the screens, let me know in the Zoom room so that I can refresh or don't leave you behind. Right, so I'm not making this up. We're going to check. I'm on the 1 hour time frame. the retail traders' favorite time frames, 1 hour, 15 minutes, blah, blah, blah. I'm gonna bet that this is NFP. There it is, see there? It says, look down, says 3rd of September, 2 o'clock. I think NFP came out at 2:30. Now, what I'm gonna do is I'm gonna cut all these other candles out of the way because I don't want them to confuse us. We'll come back to them in a second. Boom. I'll teach you about NFP. It's really more of a module 3 type of situation, but we'll talk about the stuff as we go. So I just want to understand what happened. This is a 1 hour time frame. This green candle is showing me all the buying and selling activity of 1 hour. I want to know exactly what happened at 2:30 last week, Friday, during the NFP. Right. So I remember this very well. And by the way, you know my YouTube series, how to 2x, 5x, 3x your trading account, the episode 4 or 5, I don't know which one is out now. I was buying Euro USD the whole week, Monday, Tuesday, holding my buys in anticipation for this movement of NFP, right? Because retail traders tell you, you only know how to trade NFP on Friday, right? And they try and guess or wait for the data. And I'm going to teach in the next 8 weeks that banks will use their structure. They will use the structure, right? And it's a very specific way to do it. But here's the thing, you don't know this yet. Some of you, like Mrs. Mtunes and all of you can confirm this kind of information because you've done the course before. But because I haven't really taught you supply and demand yet, this might not be, you know, as impactful as I want it to be. But come back to this recording after you're done with the course in time for the November NFP. This is about 2:30. You see that day? See that? 3rd of September, 2:30. That's when the news was released that United States had poor job performances. So the NFP data came out. All right. I'm just doing an intro. Price went up like crazy, exploded up, and then came back down and then filled the wick a little bit. This is it. Now, why did they do this? Well, Euro was bullish because dollar failed, right? The United States economy did not produce a lot of jobs. So it was a negative NFP for the United States. So the dollar fell. And as you can see for yourself, Euro USD went up. Euro was strong, all right? So that's basically what this means. But if this was a continued sustained move, Euro was supposed to be strong the whole day. Euro was supposed to be strong even up until today. Most NFPs create waves for about the next week, okay? This NFP was strong for about an hour, roughly. I'm gonna go to the H4 time frame now. We're gonna start introducing smaller other time frames as we go by. And I'm gonna start to include candlesticks on the left, right? Here I am. And I'm gonna go to the daily. I'm looking for something specific. The daily is better. Remember, this is NFP, the big candlestick you saw on the 15 minutes chart, which translates to the 1 hour, which translates to the daily. Before NFP, price was somewhere down here. When NFP came, price moved all the way up. Let's make this big. You guys can see it, right? Price moved all the way up. A lot of people thought it was going to go down because they wanted to buy the dollar, so they lost money. But some people were right that the euro was going to go up, but they didn't know how high up. They thought price was going to continue going up. You know, it was going to be a beautiful swing trade into Monday, Tuesday, Wednesday. Here's the thing you're going to learn about supply and demand as quickly as possible. When the banks use news events, they are creating market conditions. Euro USD, if you follow my entire series, that Monday, Tuesday, Wednesday before NFP was slowly approaching higher supplies, where I marked where I was going to take profit, etc. There are supplies all over here. You don't know them yet, and that's okay. They simply used NFP. I'm going to quickly draw as accurately as possible my areas of value right now, and I'll teach you them. I'll teach all of this stuff to you. They used NFP as a news event to create buyers because they wanted to sell. Now let's go back to the H4 time frame so you can really see the impact of this. NFP comes out on Friday. It's very bullish, strong. Dollar is losing, so the euro moves. A lot of people think price is going to break this zone. This is what actually happened straight after NFP. This is Monday, Tuesday, Today is Thursday. This is the journey of price. Again, NFP was negative for the dollar. Euro, according to pure fundamental analysis, should be going up. The dollar lost. It was a poor job report. What they did do, however, is create a market here, somewhere here, somewhere here. They created a market somewhere there. Market for buyers, right? Somewhere here with NFP. And when all those buyers swarm in, and it could be companies, it could be individuals, because they're looking at this data, forgetting about market structure, they all bought into a supply, right? So that's kind of like the building rule today. It doesn't matter what the fundamental news is. It honestly doesn't matter. When price gets to a supply, price will bow down and start to sell. Now, where were the banks? They had a few orders here to pump NFP. Most of the banks sold on Friday. I literally exited my NFP, my Euro buys before NFP came out, because the episode loaded about 3 hours before NFP or 4 hours before NFP. And I sell pending orders waiting there. Come what may about the data. It didn't matter what the data was. We knew the markets were going to have to sell. Positive NFP, Euro is supposed to go up, etc. The whole point of this narrative, and I think Euro is starting to slowly come up now. It's still dropping, okay, still there. It hasn't even come back to the NFP levels. This is ridiculous. My point is, generally speaking, 9 out of 10 times, you are in a far much more better position understanding what these guys want to do in relation to where is price right now, all right? And this is where we were yesterday. All right, so my intro is over for tonight's class. I don't know if that made sense. I just find it so relatively hilarious that this happens every month, literally. Markets will create a condition with the data and generally speaking, smoke out retail traders. Right, the last thing in our recap before I start tonight's lecture is everything that I'm about to teach you is not hard. You cannot forget to tell this to yourself. It's just new. It's just new information. It might need to take time. You might need to revisit it. I might need to repeat myself, but there's nothing hard. It's new. You can do it. Why can you do it? Because I have a 7-year-old who can do it. You can do it because I know no matter where you come from, you're not as old as a 67-year-old right now who is running his own 6-figure portfolio account, who's done it. You can do this. All right, so just remind yourself that. Right, and then fundamentally, we started to talk about major turning points, which is what I want to build on today, but I'm also going to add something called profiling, how to profile your assets. Profiling the assets is the oldest trick in the book that we normally do for stocks, but I started to teach people how to do this in the Forex market because it's extremely helpful. And it's in profiling that I'll be able to answer Daisy's question. Daisy, I haven't forgotten about your question. I'm going to get to it. Right, so let's recap the chart we did yesterday, although tonight I am in the mood to do about 2 or 3 more charts as we go by. I don't want to rush through a single chart, but we'll finish all of them by the time this course is over. We looked at Euro USD last night and we said any chart as a 365 student for the rest of your life, you are never going to get too big for this. You will start every chart on the monthly time frame. As soon as you hit M here for monthly, you are going to zoom out. This is the law. These are the rules of the game. Please, you are never too big for this. You are never too profitable to do this simple exercise. This simple exercise, I'm going to keep complicating it for the next 3 weeks. There's so much in here. This is your governor. The Reserve Bank governor is going to tell you everything. The Reserve Bank governor tells you the trend, tells you when the trend is going to change, tells you how long the trend is going to last for, because we are tracking banking money. Banks can't get out, like me. If I want to take profits on all the positions I have right now, if I want to take profits, I can just simply close. Close. Banks can't do that overnight. It takes banks days, weeks, sometimes months to negotiate out of positions because of how big they are. Remember, they're creating trends that we need to fall for and sustain, right? So it's very important we honor this time frame, right? So next, I said you come here, you come to this horizontal ray. I hope everyone now has trade view. right? I hope everyone now has traded. If you don't have TradeView, please make sure you email me, WhatsApp me if I didn't send you the link. It's for free. You can even find it on Google. My link is not special. It's just a free link to use free TradeView. You don't have to be paid for it right now, but you do need TradeView. It'll be very difficult to start anywhere else, right? So then we drew the highest turning point on any chart. You want to find the highest turning points. How do I identify the highest turning points, Leroy? That's a very good question. Number one, make sure you find the highest part. Where is the highest part in the chart? Number two, it can't just be the highest part by itself. Markets actually have to turn. You need to see it turn. You need to be able to show a 4-year-old your chart and say, do you see that this thing is turning? They need to see it's turning. It's that simple. There are turns everywhere on the charts. That's not what we're looking for. We want the highest turn and the lowest turn. Those are the only two turns we classify as major turning points. The other turning points are turning points, but they are not major turning points. Our major turning points are the parents of supply and demand in the chart. This is the great-great-grandfather of supply and demand. I'm going to teach you 5 types of supply and demand. All other supplies and demands are birthed, are created from these 2 turning points, right? So we're going to have to draw a rectangle. At 365, we use a rectangle because we believe in zones. We don't use straight lines. We don't believe price will actually hit a line. We don't want to miss anything, so we draw zones. My zones for supply are always yellow. Use up to you what you will use. My zones for demands are always green. Green means buy, yellow means sell. That's how I like to think through price. If you see me having a red zone, it means I'm looking at the 3-month chart, which you guys won't get on the free TradeView. This is only provided for the pro account, which you don't really need right now. But let me explain something about the 3-month chart. How do banks think through price? Banks think in 3 months, take profit in 1 year in a 10-year plan. Banks think in 3 months, have profit targets of a year in a 10-year plan. The 3 months chart tells me that every single candlestick, one candlestick in front of you represents 3 months. One candlestick represents a financial quarter. Mrs. Mtunzi and whoever has read down the course again, I think I saw Alex joining us. Look at this big red candle, bearish engulfing. Look at the 2008 drop. It's just clean. It's just, it doesn't matter what time frame you use. Supply, I'm sorry, I'm getting lost and excited. It's just clean. I haven't come to the 3 month chart of Euro USD in such a long time. Right, let me go back to the monthly. I'm sorry, I just got distracted there by myself. You'll see, you will come to enjoy this. Right, so I've drawn the major turning points on my monthly time frame. I have a monthly supply. I think it's a supply. Tonight we have to talk about how we qualify a supply. We have to really know it's a supply, right? Not tonight, sorry. Next week we'll do the qualifications. From next week, our classes will not be public. They'll all be private because registration will have closed by Tuesday anyways. Supply there. There's my turning point somewhere down here. I have a demand. Now, we did a lot of things on this chart. We looked at when it started, we put in some years, 1986, 2000. We tested the 10-year plan theory, and we saw a couple of things. Now, Daisy, do you want to remind me? Your question was, I said, price moves from demand to supply. If I can just quickly pull out my phone, or you want to just type it out. I don't know which one of us is going to be quicker. I think I'll be quick because I already have your chat here. You're saying price leaves supply and goes to demand, vice versa. So how come it's left and went back to demand again on the last chart? So maybe, am I on the right chart, Daisy? Was it Euro USD? Just let me know in the chat box. You can turn on your mic if that would be quicker for you.
Not quite sure, but I think it had a CHF. There was a chart you said you don't necessarily like.
I think it was pound CHF. You're right. Good memory. It had to be this nasty thing here. Yeah, it's this one. I'm pretty sure it's this one. Right. So yesterday, at some point, you ended up on pound CHF. I just wanted to quickly randomly show you a different chart before class ended. I've zoomed out. I'm drawing my highest turning points as quickly as possible. I'm trying to get this as accurate as possible. There we go. Right at the top there. And then I'm just going to quickly draw some zones. All right. So Daisy, I now understand your question because I am looking at what you were talking about. Make that yellow. And then Daisy's question is, oh, what's going on here? Such a perfect way to start tonight's class. Thank you so much. Guys, I love questions. I get so worried, very worried if we complete classes and there are hardly ever questions. It means one of two things. You guys are geniuses and you don't need me or the course and I should refund you. Or you have questions and you're scared to ask them. I just want to remind you, whatever you don't ask in class and don't get clarified in class, you will pay a heavy fee in the markets. I promise you. Blowing accounts in Forex, blowing means losing. Losing all your money in the markets is more common than making money. There are people, listen, losing money is fundamentally more common than making money. All right, so whatever you don't understand, please talk to me. Right, so Daisy, I didn't do a good job of explaining this chart yesterday because we're not yet there. But now that we're here because of the question, let's talk about it. I have got the pound Swiss franc in front of me, and this is the lowest turn. That's very important. There are many weird things happening in this chart before the actual recent low. For example, price got here, but then price went lower. Then price went a little bit up, but this fundamentally where we are today is the lowest turn. You see this wick here? It is, I'm just going to make this big. Right. Here, this is the lowest turn of this particular chart where price literally comes here and then turns. Remember, you want the lowest turn and a turn. And I think Daisy's question is, well, how come price, Leroy, markets move from supply to demand, demand to supply, which is such a valid question. Why is it that price has not left the demand to go back to supply? Oh, I think more specifically seems to have left the demand and then come back to the demand. And I think it's because I did something like this yesterday, which is absolutely fine. If I did something like that and that's what caused the confusion, I'll address it right now. First of all, Daisy, I'm not even looking at these areas anymore. I just want to be clear before I even answer your question. This doesn't count to me because when I draw my zone for my major turning point, it is classified by the most recent ultimate low. This is the lowest price has been so far. This low outbid this low, this low, this low. So my green rectangle shouldn't even go behind, right? So if I did that yesterday, I was just trying to make a point. But realistically speaking, you would never draw an area of value like that. All our areas of value are forward-looking. And what that means is we always draw them, you see, like this. You see how I draw my supply? In anticipation of future hits. So when we draw our zones, guys, we are anticipating that something is going to happen there in the future. So when we're not drawing our zones to see how many times prices hit or come back, I'll talk to you guys about that next week. We're talking about glass effect theory, how strong zones can be, etc. But all zones are drawn for you to know that in the event price comes back to this zone, what is price going to do, right? So is price going to sink through this zone, or is price going to treat this zone as a valuable demand, hit it and go back up? Right? You can't anticipate anything into the past because the past has already happened. So I'm assuming that helps a little bit with the confusion. But the second part of Daisy's question is, once again, markets seem to have come to this demand. You said when markets get to a demand, they must find a supply and go to a supply. Why haven't they come back to the supply? Daisy, before I move on, am I understanding your question correctly? Yes, okay, fantastic. Right, so you've heard the first bit. Here's the second bit, which is all about tonight's class. I'm going to take a picture of this so that I have proof that I taught it to you. I'm joking. I'll include it in your PDF for the week so you actually know what you've learned so far. Right, now I'm going to clear this. Here's a couple of things about that chart. Pound, Swiss franc, and what I want to talk to you guys about tonight, about major turning points and something called profiling. Number one, Daisy, I can't really fundamentally answer your question right now without shrinking the course into 30 minutes. Remember, I said there are 5 types of supplies and demands. You now just learned the first type. So I'm assuming because you only know the first type that I've taught, you are assuming that the only supply present at this moment in time in this chart is all the way up there, which is a perfect, normal, rational assumption. Unfortunately, Daisy, there are so many supplies before you get to that top supply. And you can ask any other 365 student who's registered in our private Telegram group to draw them for you. In fact, they should, so that we know that they're learning something. This is a supply. I'll teach it to you. This is another supply. I will teach it to you. You can see for yourself here, when price came to this supply that I've just told you is a supply, markets hit and came back down. Now let's look at our equation, Daisy. Price got to a demand, went to a supply, got to a supply, went to a demand. Do you see that now? Right? Well, there's another supply. I can draw it for you right now. The problem is you don't know them. But if you look, if you're one of those people who pay particular attention to details, you start to realize that there's always a small green candle and a big red candle. It's called the bearish engulfing pattern. A small green candle, a big red candle. Small green candle, big red candle. Look here, small green candle, big red candle. And every time you get a pattern like that on the pound Swiss franc, price leaves to go to a demand, comes back to my small green candle, big green candle, which is another type of a supply, which we'll talk about, gets inside the zone, my area of value, and before you know it, solves. Because it's being sold, price will then come back into my demand and go back to my supply. So pound Swiss franc did exactly what I said. The problem is you just haven't learned about these other types of supplies and demands. But I love the question because it means your mind is working. That's answer number 2 to your question. The final answer to why this chart looks like this, which is what tonight's class is about, is we are going to need to learn to profile. So I don't want to move into profiling assets too early. We're going to do that tonight. But I'd like us to draw, sorry, Daisy, are you answered before I move on? Do you feel fine? Are you willing to accept that as an answer? You okay?
Yeah, that makes sense.
Fantastic. All right, cool. So before I profile, I just want to make sure that this thing is rock solid clear, this idea of major turning points. We did pound USD yesterday, so let's do the next chart, pound JPY. Pound JPY, once again, I'm just going to go to my teaching broker, Saxo, so I don't have to delete my notes. I'm going to delete all of this stuff. We can redraw it over and over again. I am on pound JPY, a new chart. I'm going to hit monthly time frame. I'm going to repeat myself over and over again, because if you're telling me you're doing analysis, this is what you're doing over the weekends. If you want to find out where your money is, you need to know what's going on here. It looks dumb right now. I promise you, this is going to be the most important chart of your life. And I'm going to keep build. We're not leaving the monthly chart for the first 2.5 weeks of the course, just so you know. Because we have to identify all the supplies and demands here first before we move on anywhere else. Right, so the next thing I want to do is just to simply draw my area of value, my zone. And I need to teach you how to draw these zones correctly and the justifications behind them. So right now, I've just got a zone and a high place. Why is this high? Price was pumping up, turn. It is the highest turn. There's a turn here, there's a turn here. That's the highest turn. This is a major turning point supply. It is literally all I want to know. Where is the major turning point supply? Oh my goodness. There we go, supply. This is where the banks put in a whole lot of money to sell for a very long time. And if you look at this chart very carefully, all it does is sell. It left in 1990, tried to come back a little bit up after 2 years, continued all the way down in 1995, pushed all the way up to 1998, and then dropped again in the year 2020. This is the 10-year black. This is the first 10 years of pound JPY. This is the first 10 years of pound JPY. We can tell that the supply was in control. Selling dominated. Anytime there was buying on this chart, which is how I want you to understand and think through price. Anytime there was buying, you see there was buying there? they sold it. Why? Because why would I sell down there as a bank when I can pump price up to do what? To sell higher. Remember I said there's going to be sell high, and then there's going to be a logical sell high. From there, I can sell again. Would you want to sell somewhere here? No. So what do? You pump price back up to sell there. Between these two places, where is a better place to sell? Obviously here. You sell high again, and they dumped all the way there. This is the 10-year plan. And then price continued in the same pattern, pump, slightly above where it stopped last time, right up there. Beautiful sell high moment, and then continue down again. And this game continues up and down from the beginning of time. The bigger interesting part about this chart is we're going to talk about its profile soon enough, is that our major turning point demand is very clustered. So let's make sure we draw it correctly. This is the lowest. So now I'm not confused anymore. I know that there are some lows, but at the end of the day, I'm looking for the ultimate low, the low with the turn. That's my turning point. That's the area I want to focus on. So my zone's going to come to this cluster, and I'm just going to draw it across. Why? Remember what I said? Our zones are meant to help us see what's going to happen in the future. They're not helping us understand the past. The past has happened. We want to know if this is a place where banks are interested in. Look at this. Your major turning point was created, the ultimate low on the chart. You wouldn't have known what was going on. You were still learning, you were doing the course, but lo and behold, when you came back, banks come back literally like magic, coming back to collect buys in the demand, shoot back up, drop low enough, I'll make contact there, and then went back up again. This demand is active right now, right? It is what is holding price. Markets today are here, currently here. Where are they coming from? Where is price coming from? Yes, one would make the argument, and I agree, that price is coming from a demand, a major turning point demand, which begs the question then, where is price going? Where is price going? Well, if markets are here, leaving a major turning point demand, we can only assume markets are trying to make their way back to a major turning point supply. There's going to be bumps along the way. It's going to be a zigzag. This is a big chart. This chart started in 1986. Now we're in 2021. And we can see for ourselves, price goes down, goes a little bit up, down, whoop, up, down, up. There's always a zigzag. But inside the zigzag is also a sequence to the madness. We just can't see it because we're so busy with stupid small time frames where there's a lot of news spikes and etc. But this is a simple pattern of pound JPY right in front of you. Every time I'm this high, sell me, sell me, sell me, sell me. Every time I'm this low, buy me, buy me, buy me, buy me. Simple. Markets are moving from some type of supply to some demand. You only know the first one so far. So let me not jump too ahead of time here. Right. So now I know on this chart that there's my major turning point demand. This is a nice chart because I can even see that my major turning point demand works. When price comes there, markets actually move up automatically. It's that simple. If I can have the mechanisms to identify a demand or a supply and the rules of what create a supply or demand, all I have to do is come to what the banks do. Clearly this demand worked, price came back. Now let's see what happened up there at the supply. Price has not yet come back to my major turning point supply. That's an interesting piece of information. I'm going to do one more chart of major turning points. Then I'm going to go back to Euro USD, Pound JPY. What's going on here now? So Euro USD, Pound USD, and Pound JPY. Let's do one more. USD JPY is the next one, right? Then I'm going to use these 4 charts for the rest of class tonight to then start to build a profile, explain how we profile, why we profile, right? Profiling is going to become the next important thing you need to understand. And then next week, we can start to build the actual rules of supply and demand. USD JPY, my starting point, monthly. I know, I'm repeating myself. I know you get it. You now understand. The problem is when we're now sitting there, me and you, during the mentorship, doing one-on-one, and I ask you to submit your broker statement. Your broker statement is going to show me everything. It's going to show me what time you bought, where you bought, and I'm going to look at the charts at the time you bought, where you bought. I'm going to look at it to say, this was where price was that day at the current price. And then I'm going to look at that chart to say, what were you looking at? Where did you think price was coming from? Where did you think price was going? What was your governing chart doing? And you are going to have to explain to me why you bought when your governor was selling. So when I say, please don't take this for granted, it's fundamentally because I've seen that a lot of people do. Not retail traders who don't know our trading strategy. I'm talking about people who've done the course now and understand what we're doing, who forget to come back to this routine. Right, so I'm going to draw something up here. There's this good zone there. For now, we're going to call that our major turning point supply. This is not the lowest. The lowest is somewhere down here. I'm going to try and admit as many people as possible. Let's see if people are still trying to join us. A few people just entered in. Good evening. Hope you are well. Hope you are all well and good. If you have not yet registered, kind reminder, today is the last day. Our classes will be public. All right. Number one. Number two, you've got until Monday, and we've removed the whole, you have to pay the full fees on Monday. The discount will last until Monday. But honestly, I cannot admit anyone after Monday because I won't be available to help you catch up. Keep your money and wait for the next intake. If you need to enroll after Monday, just wait for the next intake. Right, so I've got USD JPY, the US dollar versus the Japanese yen. I have my major turning point supply. I've got my major turning point demand. The chart we just did before, whoever is observant, please try and be as observant as possible. It will help you in the long run. We just did pound JPY just a few minutes ago, a few seconds ago. And we say to you, markets have not come back to the major supply. You guys remember that? And then we zoomed into our major demand on pound JPY, the chart we just did together a few minutes ago, all right? And we noticed that if you look at where the lowest point was on the previous chart, pound JPY, the lowest point is here where the turning begins. So markets coming here and then slowly but surely there's a turning point. So if I can quickly adjust this. I hate using the brush because you have to click another tool. So if you see me pressing random things, it's because I have the brush activated and now I need to click something else to get it deactivated. If you look at this turning point, the lowest point, right, which is this candlestick here, markets give you 3 red candlesticks and then start to leave. They leave. This is the monthly time frame. This is going to become so important in your life. Markets left our area of value right here. Now, let's go back in time. Let's say I taught you these 3 lectures, Tuesday, Wednesday, Thursday, and then lo and behold, something happened to me. And unfortunately, I couldn't teach you anymore. Classes were now canceled. 365 Trading Academy is now closed. Leroy is no longer around. What are you going to do with the information you received from the last 3 lectures? Let's see if the information you received in the last 3 lectures is going to help you. All you know, and to make this help, is the year 2012. This is you in 2012, February. All you know is you've done 3 lectures with 365 and I stole your money. I was a scam, so I disappeared. I'm a Forex scam. I've disappeared. I've run away and there are no more classes. I've left you hanging. But all I've taught you is that when you find the lowest point or you find the highest point on the monthly time frame of a chart, you draw a zone. Could you make money with the first 3 lectures? Well, I've drawn a zone here. Excuse me. My ginger is cold. Do you guys mind if I quickly just WhatsApp my wife to make me another cup? I'm so sorry. If I lose my throat, I have to pause classes. Can I have more ginger tea? I'm so sorry, guys. But I think she loves me enough to stop whatever she's doing and do it. She's a star. Right. So we've got our low point here. The date is 2012. Leroy has disappeared. All you know is major turning points. It's the only supply and demand you know. So you go to your broker and you identify the major turning point And you're just going to put a line there. You see this red line? All our areas of value capture where we think there's a supply or demand. Our areas of value mark where we think the banks are waiting or hiding money. I'll complicate that as we go along. Your job then is to make sure you've got a pending order, a buy order or a sell order just above or just below your area of value. Remember, for supplies, we want to sell. If we want to sell an asset, it means it's going to go down. So if I want to sell, my pending order is going to be in front of my area of value. Because what I'm saying is when price gets here, I want to be in the first in line with the banks to sell, to go down. And the same is true for a demand. For a demand, we're going to put what we're going to later on call our proximal line, which is your entry point, just outside your area of value. And what you're saying here is there's been a major turning point. I've drawn it. The banks have left. If the banks were to ever come back to this thing that weird boy told me, and I'm lucky, I might get a chance to go up with them. So we can see that the major turning point was made on the 3rd of October 2011. There were 3 months of going into that zone, and then the banks left. You and I would not have known at all. We would not have known at all right here. Or this big, we wouldn't have known that they're going to pump that day or that month. We are not in the banks. The job of a good 365 trader is to always wait. We wait for the banks to move first. That's why we come here. You would not be in this buy right now. I would be lying to you. You would not know that the buys are going to happen. You would literally have to wait for them to first buy up and hope that they're going to come back to you. They will always come back to you because of what I taught you last night. No private entity, institution, or bank would take all its orders and dump them at once. Remember our example from last night. There is no company. Let's say, what did I say? I said 365, we were trading for companies, and let's say we have 20 million US dollars, and we've got 10 clients, and together they've made us 20 million bucks. No company is going to put their 20 million bucks at once and just pump the market. What if it goes wrong? The private company will just shut down and they'll owe clients money. What they're going to do is they're going to put 5 million into this pump and hope it works out. And they're going to leave 50 million here, because if they leave 15 million here and the Bank of England leaves 30 million here and the FOMC, the Fed, leave 15 million here and the Bank of Japan leaves 75 million here and the Bank of China, you get the drift. They all leave money here. We are hoping to play on this simple tactic. Remember, they have discovered a perfect place to buy low. They don't want to buy up here. Buying up here is where retail traders buy, buying in the medium or buying too high. They want to catch this asset at discount and then enjoy the ride up. So you've put your little pending order here. You've put your little, your 100 US dollars, 0.01 buy order there. And now let's see if the first 3 lectures of class have helped you at all. If I disappear, maybe I might disappear on you guys and just run away. Right, look at that. Banks have arrived, prices arrived at that area. That's you buying, right? That's you buying. Your stop loss is outside your zone, but we'll talk about that later. Right, so your ups and down, profits, not profits, profits, it's leaving, it's leaving. They created a demand. Look, oh God, the first move is just up to there. They just spent 5 million creating a trend. Now they're calling other private equities. It's Ray Dalio on Warren Buffett talking. Yeah, man, have you seen what the dollar looks like? I think the FOMC is going to move on this. Have you seen the interest rates? What do you think about the macro? In the next 10 years, do you think we can get a good dollar? What's the interest rate in Japan? Do you think if they lower the interest rate in Japan for the next 10 years, the dollar could be strong? We are not part of those conversations. It doesn't matter. What the decision will be from all these big phone calls with all these big, the Rays and so forth, is there's going to be a decision on where to put the most amount of money to get a big dollar for their bank. They will choose a demand or they'll make a supply. They'll create a demand or they'll create a supply. The major turning point on this chart was the big demand. They pump up, the 5 million becomes 15. Great. But now let's take profit. They bring price back down, zigzag. Now, all those orders, the real money that was waiting here, that's where you and me need to be with our 100 US dollars, with our $50. We want to join the gravy train. You see how price explodes for real, for real. When markets meet demand, the buying will happen. If price leaves a supply, the selling will be violent and it will happen, right? So hopefully, if I disappear for the rest of your life, I've taught you something, right? And then price continues however it wants to continue. This is the monthly time frame. So let's pause. So if you had bought here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So far, you'll have been in a position for almost 10 months in profits. The thing is, you come from a culture where you can't even keep a trade open for 2 hours, which I will fix throughout the course. Right. So guys, that's just the basic stuff around major turning points. I've cut out everything. This trend, by the way, started in October 2012 and literally continued until June 2015. One open trade for 3 years on a very small, stupid lot size, on the safest lot size in the world, could change your life. You could have still been at work. You could have continued studying. You don't have to babysit the markets when you understand supply and demand, because there's nothing that you can do. If price was to go down, it will go down with or without you. But for 3 full years, there was a clean upward trend because price was leaving a demand, right? And now prices has fluctuated around this area, and this is where price is right now. It doesn't come back to our demand because of that, and maybe in part or to reinforce Daisy's question, it has not yet come back to our major turning point demand. Let me redraw it. There are just too many things. Our major turning point demand is down there. It hasn't. Daisy and everybody else, this means price is still on its own journey. And the journey is here. If markets left a major turning point supply to go to a major turning point demand, the roles will one day be reversed. Now, let's be fair on price. It left here in 1986 and finally found its way in 2011. It's going to take a while, but it's clearly moving to the upside. I mean, if you call your retail trader trend line gurus who think this is everything in the markets, and I love trend lines, I just don't think a lot of people use them correctly. You can start to see that the bearish structure has come to an end. And it's because of this major turning point demand. All this price falling and falling and falling and falling was because of our major turning point supply. Our major turning point supply has done her job. You should have been selling this thing as many times as you could. Right now, USD JPY has slowly, since 2011 October, we're now in 2021, 10 years, been slowly trying to make its way up. If you had a moving average, I'm sure it would look something like that. Right? I hope that makes sense, guys. In part, I feel like I've done a good job at explaining major turning points. You need to do this on every single chart. Literally this weekend. Understand it. And you're asking yourself specific questions. Number one, where is price right now? Where is it coming from? Where is it going? How do I know where price is going? I have to see where it's coming from. If price is coming from a demand, it's going to a supply. What does it mean? It means on the big scale, on the 10 years, 5-year, 15-year plan of price is quite bullish. It doesn't mean we just buy blindly. No. We just want to know the big side of where money leans towards, right? For price to keep being pushed up, money must lean towards something in one specific direction. Here is price here, leaving a supply, coming down, coming down, coming down, coming down. That trend, that structure changes when it got to another major turning point demand, which is now pushing price up. I think I've explained myself in 10 different ways. Can I get a temperature check in the Zoom room? Can I please get a temperature check? Is this clear? Are we happy to move on from this? Clear. Thank you, Jay. Jay is wide awake. It's probably like I don't know, 1:30 a.m. In the Philippines there. Clear, clear, clear. All right, cool. People are not watching Netflix. Shelly, is it Sheila or I've forgotten how to pronounce your name, but good to see you. Catherine, good to see you. David, good to see you, buddy. All right, cool. All right, fantastic. Thank you. Fantastic. We're clear. Now let's complicate this picture. You guys can hear my little girl crying in the background. It's probably because mommy has gotten up to make me that ginger tea for my throat. So I apologize for the baby, but it is the price. This is the price of tea. Right. So we now know about major turning points. I hope we do. Remember, this is supply and demand number one. Supply and demand number one comes with a very important job, profiling. You must profile your assets. You must be able to say, according to the profile, this is a sell profile asset or a buy profile asset. This is fundamentally extremely important. If I was to hire another in-house trader for 365 Trading Corp, which I will do next year, February, to help me free up some time. I've got currently now under me, we've got 10 traders who trade corporate accounts with me. I'm the only one doing the teaching. So I want to see if I can get a senior trader to help me with some teaching next year. I'm always iffy about that. I prefer I do it because this is literally something I don't get paid from this. I know you don't believe it. You're like, Leroy, what did we pay? Was it $180 US? Class is 2 hours, 30 minutes. Class is 2 hours, 30 minutes. You guys paid 180 for the next 8 weeks. Class is 3 times a week. So 3 times a week times 2 hours. Let's just make it 2 hours. That means it's 6 hours per week. 6 hours per week times 8 weeks. That's about 48, give or take. Am I right? Am I wrong? About 48 hours. If you work out 180 divided by 48 hours, I just want to clarify because I think a lot of people don't understand why people charge for courses. And there are some courses that you should not pay for that are just absolute trash. Unfortunately, this is not the case. 180 divided by 48. I want you to, this is simple maths, right? You paid $180, 180 divided by 48 hours, right, which is the duration of how many times I'm going to show up in your lives for the next 8 weeks, is $3.75. Do you guys think my time per hour is $3.75? If you want to make a corporate appointment with me, there's a holding fee of $1,000 US. But this is not for individuals, for companies. A holding fee, because I have to go through your paperwork, I have to understand your statements, I have to understand your finances as a company, I have to understand where you want to go, and then I'm going to draft up a contract if I feel like 365 can partner up with you and we can trade for you. There's $1,000 US finder's fee. I then take 50% profit of every single withdrawal the company makes, and they are only allowed to make withdrawals per financial quarter so as not to affect the capital in the account. So they're only allowed to withdraw once every 3 months if they want, right? And my contracts are per year. For every financial quarter, I will sit down with you. Financial quarter is 3 months. Every month, there'll be 2 meetings, generally speaking. And it's me reporting to you, the customer, the client, about how the funds are doing and where I want to move money and why. If like our mining companies, I'm fundamentally invested, I invest their money back into mining. So they need to understand their field. But there's some companies that are like NGOs. They don't care where I put the money. So I go educate. For me to give you an update about your money and your investments, I'm going to charge you 1.5 US dollars. Right, and there are 2 meetings a month, so it's about $3,000 US per company. All right, that's how I make my living. I trade, and I trade for corporates. Class is not a viable way for me to make a living because technically speaking, I make $3 per hour. I can't do anything with that. Not forgetting, I'm still stuck with you guys for another 365 days of mentorship where you call me and say you want a one-on-one and I need to find that free hour for you. And you can do that as many times as you want in your first year of registration. Okay, I'm just want to quickly clear, just because a lot of people think, well, that's the, yeah, neither here nor there. Let's move on. We need to learn how to profile our assets. Because when you sit down with yourself and your trading account, before you buy or sell, after you now understand the major turning points, when you now understand the major turning points of a specific chart, you need to go, what's the profile? Is this a buy profile or a sell profile? Why? Most of the money, remember banks, the money, every time I say most of the money, I'm referring to banks, right? So every time the banks push a buy, and it is a buy profile asset, you automatically know, wait for demands. Do not waste your time trying to sell it. If something is a buy profile asset, it means it has the tendency to buy more times than it sells. If something is a sell profile asset, it has the tendency to sell more times than it buys. Now, 6 months after my course, when you're very comfortable in the markets, when you've made your first capitals and you're slowly starting to grow your account and you've lost here, you know why you lost and you've made more than you lose, etc., you can now buy and sell whenever you feel like it. But for the first 6 months of trading, please do only what your profile is doing. All right? Only do what the profile is doing. Now, here's another rule. You cannot profile your assets on any time frame except the governor. You can't. The governing time frame is the time frame where we're going to find our mate. Did I tell you? Didn't I tell you? I told you she's an angel. Oh, thank you. Thank you. Woo! There's a lot of ginger. Thank God. Right. I apologize. Now, the monthly time frame, your governor, is the only place where you can do your major turning points analysis. You can only find supply and demand one day. You can't find major turning points on any other time frame. You can also, it is impossible for you to profile any asset on any time frame except on the major turning point time frame, which is the monthly chart. All time frames have trends. If I go on the 1 hour time frame, it might be going up. H4 might be trading sideways while daily is starting to fall. Weekly might be going up and the monthly might be going up, right? If I go even lower, 15 minutes right now might be dropping even though 1 hour is trying to go up. All these time frames have their own trends. It is the intricacies of money, but it's also the influence of what we call intraday trading. Intraday traders will open a trade at 8 a.m. and close it at 5. So they'll make money, they're trading for the day. I want to make my money today, trade today, cash out today, and they'll do the same thing tomorrow. These guys are called intraday traders. They are retail traders who do that, but I'm specifically talking about institutional intraday traders. Institutional intraday traders set the trends for short time frames. They are moving 5 million, 10 million, 20 million in big volumes, but just for the day. That can shape multiple trends. Swing traders like myself, people who like to hold their positions in the market for more than just 1 day, maybe 3 days, maybe 6 days, maybe 1 month, maybe 7 months. Swing trading is to hold over a while. Generally speaking, we like to align ourselves with the bigger picture, with the governor, the governing chart, that monthly time frame. That's what we like to align ourselves with. Those time frames create long-term trends. Whether the monthly is going up and the 15 minutes is going down, I am going to wait for my time frame to enter the market to be in line with what my governor is doing. Not only that, so when I say in line here, I'm talking about the turning point, sure, but I'm also want to take a trade that is in line with the profile of my governor. If my governor Euro USD's profile is that she likes to sell, then I want to find myself in a place of selling more times than I'm buying. I want to see myself using more supplies than demands. What does this mean? I enter in supplies because it's a sell profile and my governor is selling. And all my take profits, my TPs, I always exit just before price gets to a demand. I enter on supplies, I exit on demand. because it's a sell profile asset, right? I hope that's clear, because I want to now go build that in your charts right now. So far, in our first week together, we've done 3 or 4 charts, and I want to do profiles on all 3 or 4 charts. We're going to start with Euro USD, which is where we were yesterday. It's where we were yesterday. So I want to make sure I have not missed out on any questions in the Zoom chat. Right, no questions yet. Beautiful. I've got a whole group of geniuses. I love it. Love it, love it, love it, love it. Right, so we've got Euro USD in front of us. We've done the major 10 points. We've told ourselves that that's a major supply. This is a major demand. Okay, cool. We know, let's go back to the whiteboard real quick. I'm going to flip screens again. We know a couple of things about price that will help us profile it. We know that anytime we want to read price, price is movement, price is whereabouts. We know a couple of things. I should have put on the recap yesterday, for yesterday's recap. Yesterday, we spoke about this important law. Price is everything. Price is everything. That means everything that I want to know about the chart is right in front of me. I just need to learn how to interpret it, but it's right there. It's everything. Price is everything. We spoke about this yesterday. Price is everything. Fantastic. But more importantly, when we want to understand something about a chart in front of us, we open our governing time frame, we draw our major 10 points, and we ask ourselves 3 questions. Where is price now? In relation to our major 10 points, where is price coming from? Remember, because price is everything, all my answers are right there on the charts. There's no need to phone Leroy. There's no need to call Google. There's no need to pay a Forex guru more money to tell you. Everything is right there. Price is everything. It's right there. Where is it coming from? Lastly, where is it going? Where is price going? I said I was going to explain why I write a lot. For those of you who don't know me, I've got this big scar on my head. All right. Don't mind talking about it. Doesn't bother me at all. Fundamentally, it's an interesting a brainwave pattern happening inside my head. I think a little bit quicker than most people. My mind just works fast. My neural connections click at a high rate. I write things down because when I'm talking, I don't want to tell you guys about all the ideas that are flowing through my mind right now. Writing things down helps me narrow down one idea and thought process because I'm not thinking by myself. If I was writing or doing my own work, I let my mind go wild. But because I'm trying to communicate as clearly as possible, I have to shut down the noise sometimes. And as I write this stuff on the whiteboard, A, it's helpful for you because you keep getting notes of the important things. But B, it's helpful for me because I keep getting track of the thought process that I want to actually deliver. So you know, our brain is based on electronics and neurotones. So I just have extra sparks of brainwave activity happening at any given time, right? Hence the cool look on my head here, right? So that's why I type. It's fundamentally to keep in control of all my thoughts, so I can clearly deliver what I want to say. So I hope this doesn't bother anyone, but I've always taught like this. Some people find it incredibly helpful. If it annoys you, just remove my screen, I guess. But I do think the stuff I put here is important, right? So I thought I'd explain that to you, right? So these are fundamentally our key questions. If we want to ever profile an asset, we need to have the answers to these questions, or the answers to these questions help us profile an asset. So now we're going to go back to the chart and apply all of this kind of stuff. Euro USD, major 10 points have been drawn. Whoa, she put so much. She doesn't want me to call her again. Wowza. Love it. Right, there we go. We've got major 10 point supply at the top, major 10 point demand at the bottom, just like we discussed. Now, I want to profile this asset. I want to know, is this a buy profile? Is it a sell profile? Here are the things I'm going to have to look at. I'm going to have to look at where did price start, right? This is where price is right now. Price is clearly coming from supply. Hello? Does that make sense? This is where price is right now. All I have to do is just draw a backward snake to see where you're coming from. Oh, okay, I see. Price clearly is coming from a supply. Wait a minute. If price is coming from a supply and it's already over here, there's a high chance that price might be going to a demand, right? Look at this long-term downward trend. It's been moving downward for the longest of time. This is since 2008. Where is price going? Where is price coming from? Price is coming from a supply, is going to a demand, because markets move from supply to demand, demand to supply. At least at this level of module 1, lecture 3, let's leave it at that. This is a clean journey of price. It's been in a downtrend for the last 12 years. Euro USD has been in a consistent downtrend for the last 12 years. I mean, it is breaking out of it now. We'll talk about that, later on in the weeks. But right now, from what we can tell, markets, man, I shouldn't have done that. Let's just remove this so I don't have to redraw our major turning points. Right, there we go. So there it is. This is where price is right now. This is where it's coming from. We're going to assume it's coming here. It's going somewhere down here. But I said, if I want a profile, I need to know where price started. Price started here. I can, on this chart in 1986, price started right down there. And then the first thing I need to ask myself is, where did price go, right? So price didn't go lower. When it started, it went pushed up. Did this, did that, did this, right? And this was the first time we saw a turning point. Let me start again. I just don't want to lose anyone. When you're drawing major turning points on charts, you want two things to be present. You want a point, which is the highest or the lowest, and you want to make sure there is a turn. When you're profiling an asset, you are looking for, where was the first turn? Do you understand? There is no turn here. This is just where price started on the charts. After price started here, price went up and turned. Our first turn was to the downside. Had price gone down or turned, made a V here and started to pump up, then our first turn would be on the downside like that. But our first real turn in the markets that we can all see without needing spectacles is somewhere up there. That's literally the first turn. In fact, I can do it like this. Let's go back in time. Let's go into our spaceship and travel. Boom, 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 boom. The year is now 1986. We are now in 1986 with internet. This is Euro USD. In 1988, 2 years later, all Euro USD has done is give us an uptrend. Simple. It's just gone up. It is only after this month of December 1987, in the new year, where Euro USD reverses on all its investors. 1 red candle is not enough. That's not a turn. I need to see a turn. It could be doing something like this. You see a consolidation. That's not a turn. I need to see price turning. We all know what a turn looks like. Let me pause this. Delete that. Delete that. Right. This is clear now. This is clear. No one, not even a kid, can argue with you. This thing was going up and then it went down. There was a turn. You see there? That's a turn, which means the first turn on Euro USD was in 1988 and it was a sell turn. Do you understand? It was a sell turn because it's dropping down. At some point, price had arrived at the actual price and the banks created a supply. Look at what they did when they created a supply. As soon as they created a supply, they bought back into that level. Why? They left money here. They came back to collect all the money and then they really dropped. Supply, sell. I'm gonna bring back the whole chart now because I don't want to get stuck on one chart tonight. I want to profile a couple of charts with you before you go home for the weekend, because you've got a little bit of work to do for me this weekend. You need to spend time with your charts. You join the course, you want to make money, you're going to put in the work. I'm not enough to make money for you. You need to put in the work. I am so confident in supply and demand. You are not. You are still very new. You need to build your confidence. You need to know that you can see these charts the way Leroy does, right? Coming to class is one of those ways, but working is a big deal. Okay, turn, went up, turn, went up, turn. One would argue we're in the middle of an uptrend. I agree. I'm not even going to debate, but it's only when these turns start getting longer down and these turns start getting longer down that price is, is eradicating lows and highs. But we'll talk about that. Between 1986 and the year 2000, can anyone guess what that is? It's about 14 years. Banks think in 3 months, take profits in 1 year. In a 10-year plan. You see this here? Price comes back and creates a major turning point down there. Euro USD. I hope you guys are understanding this, man. I really hope I'm coming out clear. It's very, if you miss this, me and you have problems. We can't even move forward next week. So tell me when you're not with me. Here is 2000 here. What do markets do after this? Well, they create a major turning point, as we've said, come back to test that major turning point, which is brilliant. They create a demand, use their own demand, and then for the next 8 years, what do? Well, they pump price up. We spoke about this yesterday, up until 2008. So now markets have moved from here to here in 8 years. Remember what I kept telling you, 3 months perspective, 1 year profit target, and we always say 8 to 14, but on general, it's a 10-year plan. Normally it's a very good 10-year plan. And in 8 years, they've arrived at a supply so high, a higher supply than the one they made in 1987, a better turning point than in 1991, a better turning point than in 1993. This is the ultimate high in the history of this chart. So from there to there, Euro USD changed its profile. That's where I'm going with this. And that's what I need you to start to pick up. We looked at where did price start? Because we want to understand, did you start off as a buy profile asset? Or did you start off as a sell profile asset? And the profiles will change from 10-year to 10-year to 10-year plan. Your job is to understand the kind of profile you're in right now in 2021. Are you inheriting an asset with a buy profile? Are you inheriting an asset with a sell profile? I'll show you why. From 2000 to blah, blah, blah to 2008, there was a buy profile. The buyers dominated. It's clean. It's look from demand to supply. There were months where they would sell. Why would they sell? Remember, we spoke about this yesterday. Let me remove this yellow line. Why would you sell in the middle of buying? Well, number one, because banks don't move in straight lines. Banks create zigzags because we know we have to mize retail traders. We've got to trick retail traders. Number two, we have to take profits. Every now and again, we take profits to push price down. But here's the real reason why banks, why you'll see a lot of red or some red candles in the middle of an uptrend or some green candles in the middle of a downtrend. Well, how else are you not going to buy low? Have you heard the term buy the dip? You saw Bitcoin, Ethereum dropping. I think the dip's already been bought. I mean, I posted this stuff 3 days ago on my socials, right? I'm pretty sure people already started buying the dip. If you're in a buy profile asset, you buy the dip. The dip is simple. The dip is when there is an impulse explosion, price goes up for too long, just know it's going to take time to cool off. This is the banks right now taking profits here. But what they're going to do is they're going to create a scenario where they can buy again. Now, let's just create our own prices, because if we use Forex quotes right now, we might confuse ourselves. Let's say the price up here. The price up here. All right, I want you guys to see this. Let's say the price up here is $3. That's number one. But let's say the price down here where this green candle wick came is $1. The price up here is $3. The price on this area is $1. Where is the buy low opportunity? Anyone on the Zoom room? Price up here is $3. The price down here is $1. Which one of those two is buy low? $1. Yes, sir. Clean as day. Absolutely. Absolutely. Mrs. Mtunzi, like everybody. Alvin, yeah. You guys are not watching Netflix. You're here with me. Thank you. Exactly. It's $1. Now, let's change this amount a little bit. Let's change this amount. Remember, the real quotes are here. the exchange rate, but we'll talk about that stuff. We're talking about pips and all that stuff in week 4. Right now, we need to understand how markets work. Now, let me quickly change this. Let's make this $50 and let's make this $30. Let's make this $10. You're starting to see the magic here. And let's make this $1. So now $1 is where the banks bought once, twice, 3 times. They got Euro USD at the most pathetic price. When you're buying, you know what I miss about lecturing and why I want to go back and lecture at Rhodes again, maybe next year, because I did it for about 3 years, is that in the lecture theater, you're watching students' faces. So I can actually tell who's getting it, who's sleeping, who's on their phone, who's excited, who cares, who doesn't. On Zoom, it's so, I don't know. I feel like I get excited by myself. What's going on here? Let's move this away. Now, in any case, before I forget my train of thought and why I've brought us to Zoom, when you go to the Forex market with your phone, with your laptop, and you hit buy USD ZAR, what are you buying? What are you selling, right? It's called units. You're simply buying units of a currency. You're buying or selling units of a currency. The broker isn't going to send you more USD ZAR, right? USD ZAR is not one currency. It's the dollar versus the ZAR. You are buying units. In Forex, we use lot sizes, and I don't want to complicate anything right now. 0.01, it's the power, it's leverage, because this can easily become 100.00. It's up to you, right? You will never use that if you're part of my academy. You will never, ever over risk accounts. 0.25, 0.05. It goes on and on and on. But this simply gives your small account power to buy or sell a lot of units, margin trading. This is why it comes with risk, because your broker gives you superpower in the market, allowing you to use a lot size. So if you've got $100 US, let's say you've got $100 US in your account, but you're using a leverage of 100:1, something ridiculous like that, right? It means you can all of a sudden with the $100 US, right? 100:1. Let's do some quick maths here. If you're leverage, and I'll explain leverage, it's a complicated concept, but essentially your broker is going to want you to decide what type of leverage you want. What type of superpower do you want? Specifically, how much money do you want to borrow from me, the broker, to trade your small account so you can make big money and become a millionaire overnight? That's the Forex dream. Technically, it's the Forex nightmare. You want to avoid such traps. Because of a leverage, and I'm pretty sure I know the amount, I'm just going to add the zeros. If leverage of 100:1, it means your $100 US, it stays as $100 US, but it has the buying power. Understand this, buying power of, now let's add all those zeros. 0, 0, 0, 0. What's that? But 10,000 or 100,000, I don't know. There's the buy, let's say for now, there's the buying power of a $10,000 US account. And if you start your broker, your trading account with $1,000 US, and your broker and you and your broker agree to use leverage of 100:1, that means, technically speaking, you've got $1,000 US, but you have the ability to buy 100,000 foreign currency units. That's what trading is. There is no one who trades anything below 1,000 units, right? Standard accounts, 0.01 puts you there. It literally allows you to start trading 1,000 units going up. Now, for the banks and for you and for me, if a currency, let's go back to Euro USD, because I want you to see this. I really want you to see this. Look at this here. Look at where our major turning point is. Our major turning point is all the way down there. Now look at the numbers on the right side. You see these numbers? These are the currency codes. So I'm gonna just put a line there and look at the number in the red, 0.83981. So we're gonna round it off to 83 cents. Is everyone okay with that? 0.83, 83 cents. Now, Euro USD, what's the year down here? 2000, 2001, somewhere there. Euro USD in 2000, 2001, whatever it is, Euro USD was trading about 0.83 cents to the dollar. Okay, that's it. And I just told you, if you're buying or selling in Forex, you are buying units. And those units are up to you because you choose the lot size, you choose the superpower, you choose the leverage, the power you want to use. You give your broker, you come up, you say, look, broker, give me the superpower, give me more leverage, right? I know I only got $100. Let me have an account that can position itself to make $10,000 purchases. The broker will give it to you because if you're right, you get a lot of money amplified. And if you're wrong, you lose at a quicker rate, right? That's how they make money, or partly how you lose money or they make money, whatever. The banks don't play. These are banks. These guys have a lot of money. Just so we're clear, it makes $6 trillion a day. The Forex market is the most lucrative market in the world. It's still more lucrative than Bitcoin. It makes 6 trillion. How many units do you think banks are buying a day? Right? Like if I can handle 100,000 units with a good lot size, standard lot size, easy, which means I'm getting paid about 10, 20, 30, 40, $50 per pip sometimes, right? And I'll explain that stuff later on. Now, if the banks are buying Euro USD at its current price is 83 cents, but these guys are buying 10 million units of Euro USD. So much maths today, oh my God. Right, let me put out a calculator. I'm not on my phone taking pictures of me in my own course. 0.83, 83 times, someone is probably smarter than me and already done the maths. 1 million, 10 million. So they want to buy 10 million units. And this is literally a mechanical example, all right? Just a mechanical example of what's going on in the Forex market. You are going to be buying your own, whatever your broker allows you to afford with the account size you have. But banks are buying, in my example, 10 million units of Euro USD at 0.83 cents. It means these guys have spent about $88,300,000 there. All right, now let's go back to my level. Because you guys told me that the buy low, when I said which one is low, 3 or 1, you guys were all correct 1. Now let's start here. I say this is now our 1 at 83 cents. We can forget about 83, we can forget about 1. Let's use the currency codes. I thought it would be confusing, but it seems simple enough. This is 83 cents where the banks bought. Look at how many times they bought. They bought once, came back, bought again, came back and bought again. They bought this thing 3 times before Euro USD was even $1 or a 1 euro to the dollar. You see, this is where it is there. Let me show you. This is where $1 is, or 1 euro, up there, somewhere there. See there? It says 1. Before that, they tried to buy this thing 3 times when it was in the range of 83 to 95 cents. They tried to buy it 3 times. Let me just remove all these numbers. We're going to use the actual Forex codes in this example. Now, if you look carefully, I'm going to remove all these lines. I just want to talk to you guys about one of these buys, not all 3 of them. They bought from 83 cents all the way there to this point. Why do we say that? Because we can see that in the next 3 months, they sold some of their positions. They took profits. They didn't close all of them. They took profits for 3 months. But they bought continuously from the 1st of February 2002 all the way to the 1st of May 2003. Guys, I feel like I'm getting excited by myself. I'll say this again. This candlestick here is 1 February 2002. Banks think in 3 months. Take profits in a year. This is the Forex market. This is not a video game. This is not Leroy's program. This is Euro USD. And I'm telling you, they think in 3 months. After a year, you see this last green candle? 1st of May, price starts to drop. In the following year, from February to May, literally a year and a month, basically, they take profits. They honor that stuff. But where do they take profits? I'll show you this. You see this red line? This red line, look at that there. So now Euro USD is no longer 83 cents to the dollar. Euro USD is now $1.19. I've never taught this way. I wonder if this is more effective. The nice thing about live classes is I'm reinventing myself every day. By the way, now that you guys have joined the Academy, next year when I host live classes, you are more than welcome to come for free all the time. You don't even have to message me. I'll always post the link in the right groups. If you feel like you want to refresh the course, it doesn't expire. No one's going to ask you to pay again. There's nothing to pay again for. You feel like I heard the course last time, I want to come back for free, come. I learned through repetition. I repeated my mistakes for 3 years. That's when I learned to stop doing it. It took me 3 years to stop doing dumb stuff in the market. It cost me $36,000 US in total, losing $50, $100, $300, $1,000, selling my motorbike, losing all of that. The little car I had, I lost so much money, repeating mistakes. It cost me almost $42,000 US to acquire the education I now have around the Forex market, to unlearn and relearn new habits. And even then, I had to repeat a lot of things. So if you feel like you need to repeat the course, come again and come again. Even while you're trading, it'll sync better. It's a free offer. You take it or leave it. It's just up to you. Right. Let's go back to our thing. A year ago, the bank spent $8,300,000 US in our example, buying 10 million units of Euro USD. A year later, the price is now $1. 1 year later. I haven't taught you guys how to trade. I hope you're aware of that. And it's an 8-week course. We've got nothing but time. You must understand what's going on. Supply and demand is really a rational trading strategy for those who understand what's going on. 1 year later, Euro USD is now trading at 1,19. Why? Well, because they pumped, it's actually 1,20 because it's 1,96 something. So I'm going to make it 1,20 and round it up. Because there's a pump. There's a pump, buy. There's an uptrend. Price was leaving a demand going up. Here's the kicker. Let's not forget that these guys bought 10 million units. So how much do they have? They invested 8 million in this example. Now it's 1,20 cents times, and someone might probably has already done the quick maths. My brain is tired. That's 100,000, that's 1 million, that's 10 million. Right, so now price is at 12 million US dollars. Yeah, I'm willing to bet that the take profit that was seen, and remember, I'm just making the number of units they bought. They could have bought 100 million or I don't know how many. I'm just making a bet. I'm willing to bet that this that was seen, this take profit here was the difference. Normally, that's what they would do. If you invested 8 million, you'd start to slice. That's why the drop isn't too long. It's just 3 months and it continues. It's the difference. They closed $4 million worth of trades and kept their capital running. Because if you notice, what's going to happen is on this trend over and over again, as markets make their way in their destination, because markets are not random, excuse me, price is going to keep going up and up and up, leaving the demand, making its way to the supply. So we're going to take profit here. We're going to take 4 million. And so we still have our position of 10 million units at 83 cents. But now, every now and again, we'll take some profits and then keep the pump going. And as they are doing that, I asked you earlier on, between $3 and $1, which one is buy low? Everyone said $1. You guys remember this? I said this is $3 here, and let's say this is $1 there. Which one is buy low? All of you said the $1. All of you were correct. Now, let me tell you what the banks did, which is what you're going to learn in this course, because there are 5 types of supplies and demands. After they take profits, banks always create a new area of value, a new place to buy again. And I want to tell you something. They are not going to go to their clients and say, we need more capital because we want to buy again. They spent 8 million here at 83 cents. Price is now at 12 million here. They took profit of about 4 million bucks here. They put 4 million here. And this 4 million, which is no longer capital from their own pockets, but simply profits from the market, is now going to make them another 4 million, while their 8 million is making them another 4 million. And now they're going to take profits here. Let's make that 6 million. And that 6 million is going to run while the 4 million is running, while the 8 million is running. And you get this 10-year trend of buy, 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 buy. All right. It's a continuous process. And then at some point in time, when banks are now done doing what they needed to do to the asset, they close all these positions, and it takes time. So the only best place to do something like that without crushing the market is to create a supply, is to say, look at this now. Let's clean this chart. Too many things going on. Guys, I'm a bit animated because I'm enjoying myself. I hope you are with me and following. A temperature check as quickly as possible. Are you guys okay? Is this making sense to you? Because we need to wrap up and do a couple of profiles. But I just want you to understand what's going on. Temperature check, you good? If you're not good, let me know why. If you're watching Netflix, tell me what's nice on Netflix so I can also go watch it. Fire. Blessings, man. Blessings. All right, cool. All right, I've got a couple of people talking to me. Other people are, the volume is too loud. They're on Netflix. We've lost them. Fantastic. Right. So now let's look at our major turning points. A fresh take on the ladder. Yes, Mrs. Mtunzi, always welcome, ma'am. Always welcome. I'm hoping the ladder keeps going a little bit higher and higher, that we're not always starting from ground up. Very happy. Now, look, these are our major turning points that we both drew. Right, our 83 cents buy is somewhere here. Somewhere there. There we go. Somewhere there. That's 84. I'm just trying to be as accurate as possible with the example, right? So there. Let's call that 83 cents. Look at where our major turning supply is. So now, somewhere up here, the bankers have decided, all right, now, I mean, let's look at our exchange rate, comrades, for a second. Now this thing is hot. It's literally trading at 1.60 euros against the dollar. This thing used to be literally 83 cents. How many units do you think they bought in those 8 years? It has reached a supply. It is now time to close all these buys. Price has arrived at the current available amount. It is now too expensive to buy. There is no buy low up here. It's now high. Let's sell. Let's kill it. Banking financial crisis 2008 happens, where there is a crazy shorts, right? So all of a sudden, boom, there's a supply, a massive take profit. Banking sector, some people were fighting bankruptcy. There's a whole drama happening here, which maybe we'll talk about, over time. And so begins the trend where the baton stick from demand is passed on to the supply. And what happens? Well, it took us 8 years to get to this supply. Let's start a new journey. This is 2008, and surely but surely price starts to maneuver around a new profile. Price starts to be a sell profile asset. What does it mean? It means selling got you more profits than buying long term. It means this asset sold more from 2008 up until where we are today than it did previously. Previously, it was a buy profile asset. So if I was trading in the 2000s, if I plot a vertical line here between 2000 and 2008, then I definitely here to this side of the chart, I would want to be a buyer. But now that price is now in a sale profile dispensation, you know the term dispensation, a new time frame, a new period, a new set of ideas. Euro is cooling off, but cooling off to where? Why in random? Surely price has to get to somewhere where there is sustainability, where there are orders. They only use 10 million units here. They only bought at 83 cents. Could there be more buy orders here in this demand? Could the banks be we already know that when price gets this low, banks have an appetite to buy it. We also now know that when price gets this high, banks don't want to buy it. They have an appetite to sell it. Therefore, here we definitely had a buy profile. But currently now, as we speak. And that buy profile was changed by a crisis. I'll repeat this part. The buy profile was turned around with the crisis. There we go, 2008 crisis. Then all of a sudden, this market became a sell profile asset. Now, I was not trading in 2000. In 2000, I was in high school or primary school. I can't remember. In Zimbabwe, high school is 6 years. And I leave Zimbabwe in 2009 or 10 or whatever. So I was still in primary school. I was not trading then, right? So it doesn't affect me. What affects me is where is price today, right now, today. I'm trading today. You are going to be trading in the next 8 weeks. You need to know where is price right now. That's number one. Number two, where is price coming from? Because wherever price is coming from, that's where the momentum is. That's where the money is. Is it coming from a supply or demand? Well, according to me, it looks like price from the only supply or demand I've taught you so far in week 1. Because in week 3, I might change Euro USD a little bit when I give you other types of supplies and demands that are intermediaries moving price. But right now, what we know for a fact is price has left a major turning point supply. That's where it is now. When price was leaving a major turning point supply, euro became a sell profile asset. This is why Warren Buffett put about 1.4, 1.5 billion US dollars and shot the euro during the crisis and held it for 10, 12, 15 years. All right, just held it and held it and held it. Well, not 15, but he hasn't closed. As far as I've checked their order flows, he has not closed his euro sell. Right, this man has been holding a sell because he understood there was a supply, the money, the asset had arrived at a value place where it can't go higher. Not only that, but he predicted correctly that if you've got a major turning point in charge, it is bound to change the profile of the asset. So it becomes a sell profile. So now when I start to look at where is price today, price is here, number one. Number two, is leaving a supply, has not yet made contact with the major turning point demand. Therefore, I always tell people, even in the war rooms, you hear me in the war rooms, I'll be like, look, man, I'm going to buy euro this week, but I'm not a euro bull. I like to sell my euro. I like to sell my euro because where price is today, price is in line as a sell profile asset, and price is leaving a supply, going to a demand. The only way, my brothers and sisters, we can make it to a demand is we keep pushing price down. The only way price can be pushed down is if price keeps being sold off. There will be many greens, but we know that the dominating trend is clean, it's clear. It's a sell profile asset, right? We'll talk about the complications happening right now, but until we get there, we have a sell profile asset. The time is 8:29. I've got 1 minute left. Can I please do one chart? It won't be as long as I just did it right now. It's just for you to get a clear picture. Let's look at pound USD, which we did yesterday as well. Pound USD. Right, so these were my notes for you last night when I told you that banks think in 3 months, 1 year, 10-year plan. Stuff is important. I keep repeating it because it's important. There is your major turning point supply. There is your major turning point demand. I'm going to remove this. 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 I hope you guys are well in the live stream. We're about to end class. Last day of early bird registration, but the price won't change. So the only thing that you need to be worried about is registering before the end of day Monday. I cannot, because then I have to come up with time to make sure you understood week 1. And there's no time in my schedule. I am so booked out. So I'd rather keep your money and wait for the next intake. If you can't make it in time for Monday or this weekend, it's okay. I'm not going anywhere. You will learn the stuff next year. It's fine. But please, it's a disservice to you joining late. Honestly, I don't think it's fair. But yeah, it's up to you. Right, so this is our turning points, our profiles, blah, blah, blah. There it is there. Well, next week, guys, we need to qualify the zones that I'm just drawing. We need to make sure they're supplies. There are a lot of rules before we can say something's a supply. There are a lot of rules that we need to look into this cluster What makes a supply, right? That's what we start to deal with in week 2. But for the most part right now, we've got 2 major turning points. We've got turning points, no one can argue with us. Turning points are supposed to be clear for kids. Kids must see price. Oh, okay, yeah. No, definitely there was a turn, right? It must be very clear to anyone. If you're struggling to see a turning point, it's probably not a turning point, right? That's generally my assumption. If you cannot see that something is a turning point, it's probably not a turning point because price must clearly turn, right? So we've got this situation here with the pound USD. I'm trying to get my areas. There we go. My demands are green, my supplies are yellow. What did I say we do? We look at where did price start? Why? I want to see the first turning point. Look at price, just like Euro USD, in a rush to go up and turn, in a rush to go up, right? And then eventually it gives us the highest turn of a lifetime. It seems to me that sell profile assets have a tendency to start from supplies. It's kind of like an obvious thing, but just to express it to you in case you're missing it. So price eventually gives itself an identity. The pound US dollar, although it started here in this particular chart, from 2008, decided that no come what may, because of the crash, because of the direction of money flow, I am a sell profile asset. Now, since 2008, if you sold here, you would still be in profits without having to do anything. You cannot show me a place in the chart where price came back and took you up. Impossible. If you sold here, sold here, sold here, sold here, so you literally are in the money because markets, okay, maybe if you sold somewhere here, this is the last place you'll be able to sell, right? But I'm talking about smart money. Smart money would never sell down there. Smart money sells high. You can see the cluster, the consolidation, the last sales, and you can just see the bleeding, right? All the orders are in, they're just pumping, bleeding market. Markets can try and recover during a sell profile or a buy profile. It won't last. The profile will dominate, which is why when my dollar is selling and my governor is selling, because my governor tells me the flow of money, I am never going to be there trying to buy the dollar. Because it looks like this on the big time frames, but you don't know when on the small time frames, those different time frames, the 15 minutes, the 1 hour, the H4, you don't know which trends they will misalign with. Not every day is a trading day. There are days where smart money has put in their positions and it's just us retail traders fighting here. All of us with our trading strategies and our super robots and our amazing indicators and our Forex prophetic gurus, all of us are just fighting for peanuts down there. As we're fighting for peanuts, we're messing around with small trends. We're creating buy trades with our little retail trader money. And because we're buying, smart money wants to sell. If smart money wants to sell, it's going to need someone to push price up a little bit to buy so that they can sell. I cannot buy something that's not been sold. I cannot sell something if it's not going to be bought. So they create market conditions to confuse the masses. But if you understand what your major turning points are telling you, which is the direction flow of money. Major turning points tell us the direction of money. They will let us know this is the goalpost, my friend, on this chart. This is the highest place, this is the lowest place. But not only that, because we started up here, we are going down there. Because we are now down here, look at price. Look at what price has done. Let's remove all this stuff. I know it's 8:30. Please, I'm done. I promise, please. I'm done. I know. I'm sorry. I said I'll start delaying in week 3. I'm already showing my true colors now. There's just so much, man. I'm too excited. But anyways, I'll let you go now. Price started here, got to a demand. Look at how before it got to a major turning point demand, look at how it respected this trend line. It's like, yo, we're now going to up. Let's go back down. It got close. No. Let's go back down. Now that we have a major turning point demand in charge, what's happening? Well, prices doesn't care now. Price, she's here, consolidating. Where do you think she's going now? Where do you think this? What do you think the next 10 years are going to be like for pound USD? The sell profile is starting to change because the flow of money has changed. The banks thought this was too high for price. It was at £2.11 to the dollar. Fine. Then they now think, no, but £1.13 to Trump's dollar, that's disgustingly too low. So now they're pumping it back up again. They are literally, clearly pumping it. I can now say to a client who will sign a 5-year contract with me and I'll say, look, I'll manage your positions per quarter. We're going to be locked into a position for the next 5 years. So just so you know, there's going to be ups and downs on the portfolio, but I guarantee you, I'm pretty confident that if we sit still, we're going to see beautiful gains on the upside of this. You can take profits every year, but for the most part, the trend that I want to put the $5 million in, or the 10 million, or the 100,000 is going to be in GBP USD for the next 5 years. Meaning you can just eat from that. Sign here. And fundamentally, I'm doing that because I'm looking carefully. I'm like, okay, I see the sell profile is coming to an end. Price is struggling. I'm open to this happening. Price is more than welcome to come test this demand first and then go up. We'll talk about that later on. But in the long term, I now know what my governor is thinking. If I know what my governor is thinking, I now know what I need to go do in the accounts. Guys, I'll end it here for tonight. I went over time by 7 minutes. This is not bad. I have a reputation for going over time quite a bit. I thoroughly enjoyed this. I am excited, I think, for the most part, right, for what is about to happen in your lives. This is it. This course is going to run until the 29th of October, roughly. That's about the 8 weeks I calculated. If you guys want an extra week, if you want Q&As, I'm not hosting another live class after this. So we can definitely use November in a different way, right? I'll be available. I just can't take new people in. And I actually want to focus on the students you're with in the private Telegram group. Some of them need to move out of that group and become senior traders. So I want to figure out who needs help, who needs to be accelerated, etc., for November, December. And anyways, running a course in November means people have to do stuff in December and people never show up or they start to drop classes. But yeah, I appreciate you. I'll see you on Tuesday. Our next class is next week, Tuesday. Remember, classes are Tuesday, Wednesday, Thursday. Tomorrow is Friday. During the day, I will make time, or someone in the academy will make time to put together all 3 videos into a drive. We'll send you a link. All your recordings are going to go there moving forward, right? It's still important to come for the live classes, but in case you need to review stuff, I will give you access to your videos at the end of the week. Friday, tomorrow, or early morning Saturday, I will put together a PDF of what I've taught you in this first week. Read the PDF. The PDF will articulate everything that I've said in the last 6 hours, 2 hours on Tuesday, 2 hours on Wednesday, 2 hours today, right? And in those particular 2 hours, 6 hours, whatever, my PDF will summarize key take-homes, clean definitions. What is this? What is that? Please make sure you read the PDFs before you come to class on Tuesday. The PDFs will force you to reflect and find questions. If you've got questions, you will go, oh, I didn't get this when you said it. So maybe the PDF will make things more clearer, or maybe it'll allow you to know what you're not fully understanding. So the 30 minutes where I use for introduction on Tuesday will be for questions. I want us to make sure when I start to next week, we're going to complicate stuff. We'll talk about areas of values, all the types of areas of values. How do you qualify supply and demand? Still on supply and demand, number 1, major turning points. And then after that, on Wednesday, we're going to start to discuss the second type of supply and demand that we find on the charts. And then we just keep rolling and rolling. So I like to make sure every week we move sure that we're both on the same page, right? But apart from that, I appreciate your time. Welcome to 365. Those of you who are now finalized and got your student numbers and all that kind of stuff. And I'll see you guys on Tuesday, all right? Don't forget, if I am available and free, I'll announce on Telegram. On Sundays, I host a war room. It's got no consequence to you guys because you guys are learning. You're not yet trading, but you're more than welcome to join. So you can actually see how this information is run at a quick pace to find trades, right? Because that's what I'm going to be doing. I'm back now. If I've got a course, I normally restrict traveling, right? So for the next 8 weeks, I should be home. So I should have 8 consistent war rooms on Sundays now, etc. Right? Shake my hand, guys. Have a good night. Thank you so much for your patience. Thank you so much. You teach it in the most simplest way. Oh, thank you. Thank you for that. All right, cool. I'm pumped too. Fantastic. Fantastic. Thank you, Nyasha. Cheers, Lucky. Good to see you. Good night, everyone. Good night. I'll see you guys on Tuesday. Thank you for the compliments. Thank you for the comments. Look at me in my 2 ginger cups. Right. Good night, people. I'm ending this meeting now. Cheers.